Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Thursday, the 2nd of December. All right, another gorgeous day there on the equity markets getting hammered. I'll come back to that in a sec. But I'll tell you what, I think the market's seen enough and heard enough about this Omicron to work out that it's not as going to be as precarious as the other sort of strains of this coronavirus. And with that, the markets are going back to where they were before. Right? And we're looking at a strong dollar. The Fed basically reiterating that they're looking for the same plan, if anything else, trying to get that going as soon as possible. So when you come back and look at the markets, what we were looking for this week is basically transitioning or layering over the Omicron situation on the market, see how it settles in the financial markets and global news, etc. And I think what we've done through this process, and let me just show you the charts, you get a better idea of what I'm talking about, is we've had a good clean out of a lot of these, trending positions, right? There was a hiccup, obviously Euro bounced aggressively as the Swiss sort of rolled over and the yen, the two safe havens kicked in. So we've seen a bit of a clean out of the overall long US dollar position. Now, I think the market's more comfortable now. You can see these currencies sort of just drifting lower with the situation, with the Omicron. They've assessed what that is, not a huge potential volatility risk in the market. And with that clean out of some of these positions, you're going to have fresh cash coming into the overall long dollar trend, right? So I think it's actually quite safe now at this point to be looking to get back into those trades, okay, buying dollars. And that sets us up nicely as we come closer towards the non-farm payrolls. Now, there are a couple of weird things, like the 30-year bonds here getting absolutely drilled, the yields. So the treasuries basically acting on their own, right? This is like normal market conditions where the treasury bonds are sort of fluctuate around with various things. Equity markets getting pummeled. I think what we're going to see now is a very clear risk-off profile, risk on, risk off, right? Where the equity markets will start driving these currencies lower, and we'll go from there. Now, you may not be seeing that at the moment, and that's primarily because the US equity futures, right, which gives us a very good indication or tells us exactly where the market's going to open up tomorrow, they're coming in strong, right, at the moment, up 0.3%. Now, that's not huge by any stretch, but it's a little bit of a correction here from the bloodbath in North America. A bit of a correction. You're going to see potentially Euro, Sterling, Aussie, Kiwi sort of bounce a little bit. The dollar pairs may drift a little bit lower initially, but I don't expect that to last, right? I expect, once again, by the time we get into the North American session, the equities to get belted again, and Euro, Sterling, Aussie, Kiwi ready to slide lower. Just leave out, I think at this stage, the Swiss and the yen, they're doing their own things. But I think dollar CAD's ready to go up. And the dollar index, obviously, that will just chime higher if Euro and the other pairs are going lower, right? So that's where we are right at the moment. And I think now, as I said, it takes a few days, at least 3 days for this to settle down so you can get confident with what's happening with the numbers. So now start to come back, integrate the fundamental picture once again, and see what's going on with these numbers, right? So most importantly, a lot of the news is coming out in the North America session. So that's the most active and directional, right? So as we come through trading today, there's a bunch of various things here coming out, or dribs and drabs, I should say, not various things, but a bit of European data, unemployment rate, etc., and some of the initial jobless claims. And then basically the market is going to very, very closely start focusing on the non-farm payrolls. And as I've been saying, the non-farm payrolls at the moment aren't the same as what they were before in the sense of the impact, right? The Fed's already got the plan. As I said, we really need to see dramatically bad numbers or really extremely high numbers to get a change in the general plan. To me, good numbers, got to be looking to buy dollars. Weak numbers, and I'm talking exceptionally weak numbers, probably sell some dollars, but the trend is your friend. And it looks like the trend is going to kick back into gear, or it is showing signs of that. We've got some new support lines here on Euro to be looking to sell through. Sterling, well, big picture wise, it hasn't really changed much. Aussie came back and tested the resistance lines, now falling out of bed. Commodity prices are falling. Oil's falling. It fits nicely for the commodity pairs, which is Aussie, Kiwi, CAD to be falling. That means the dollar rallying, and away you go. All right, guys, that's it from me. If anything, as you can sort of tell, I'm a little bit more positive about the prospects for the dollar trend to continue now, barring any sort of left field claims about the Omicron. Looks like it's just going to filter into the market. It'll be there on the news, but the initial impact is taken out, and we'll see how it goes from there. All right, guys, have a good one. Cheerio.